Hello, and welcome to the Investing on the Go podcast. I'm Chris Sarley, and today we're joined by Simon Moon, manager of the elite-rated Unicorn UK Smaller Companies Fund. Thank you for joining us today, Simon.
You're welcome. Thanks for having
me. Let's start, obviously, with UK small caps, clearly. They've had a great start to the year, best performing asset class, second to energy funds. Could you maybe just give us a snapshot of why they've done so well and whether you think this will continue?
Yeah, absolutely. Well, small companies, tend to perform best in this part of the economic cycle. They're hit harder generally in times of extreme economic volatility, as we saw about a year and about 15, 16 months ago. But they tend to recover at a much sharper rate as well. So that can be seen by looking out a year or two ahead, and small cap EPS growth is over 20% for 2022 compared to 5% on the FTSE 100. That's obviously a pretty appreciable difference. And the UK economy is favourable versus many other developed nations. You look at the success of the vaccine rollout, the makeup of the economy, and the service-led nature of many parts of it. This has been further boosted by the Brexit resolution we saw 6-7 months ago. That removed significant uncertainty that had been overhanging the UK for years. I think you sort of combine this with sterling strengthening, and it's still a long way below its long-term average, but it's getting stronger as well. And I just think you combine that with a really attractive valuation makeup of the UK small close market as well, and you end up with a pretty compelling case. So it can keep moving forwards. Small companies tend to be the drivers of economic growth and tend to be the biggest beneficiaries of that as well. And we're, in my opinion, absolutely on a tangent of recovery at the moment.
Merger and acquisition has obviously been picking up lately. Is that a good or bad thing for smaller company investment? Obviously there's a chance to make big sort of gains, but obviously there's probably potential dangers as well.
Yeah, Chris, that's a really good question. It is a double-edged sword. It's always a moment of excitement to see one of your companies you hold receive a bid approach, and you hope you may see another sort of come in from the wings as well. But you're potentially going to miss out on future years' growth from what would be a very good company. But it's no surprise to see well-run market leaders. The focus of trade buyers and PE buyers as well. It does reflect the improving outlook and attractive valuations I just mentioned, combined with that low level of sterling compared to its long-term average. And it occasionally is disappointing to lose, high-quality UK PLC, but there are still plenty of other opportunities out there. And when you run a high-conviction fund like this is, you can reallocate that capital to any one of a number of very good companies that are on your sort of subs bench.
Obviously, with a portfolio like this, we want to talk about the stocks. I mean, they're the underlying drivers. So let's go into a bit of detail of some of your top 10. Let's start with Alpha FX, which is a payment and collection company. Are they starting to think about cryptocurrencies? Obviously, that's a big buzzword at the moment. Maybe just talk us a bit about that, please.
Yeah, of course. So Alpha FX is they're a payment and collection company, but they're also primary element of their business is hedging transactions for small and medium-sized businesses. So basically, they react to whatever their companies are transacting in. So they've not really talked about crypto yet, but the company Alpha FX itself is very client-centric. And if that's what the clients start using, then they'll start using crypto as part of their hedging mechanism as well, and they'll all build it into their infrastructure. But there's still plenty to go for in traditional currencies, long-established currencies, in my opinion. The company can focus by growing the service offering, which they're doing, growing geographically, and expanding with existing clients, all of which they've got a very good long-term track record of doing. And just probably as an aside to the strength of this company and what it's achieved in the last few years, it IPO'd only about 4 years ago, I think, and it IPO'd at less than £2, and it's now, I think, over £16 today. It really has done incredibly well on earnings growth, and when you look at that earnings growth, it's very attractively valued on a price earnings growth PEG ratio. So I think there's loads more it can do when cryptocurrencies become an important element of their clients' needs. I'm sure they will build it into their infrastructure.
Let's turn to another one now. Braemar Shipping Services is obviously another interesting one in the top 10. We have supply chain issues around the world and the now infamous blocking of the Suez Canal. How is that still impacting that company, or how much has it impacted a company like that?
Important to sort of recognise that Braemar is a ship broker. It doesn't own or operate ships. So you've got to look at it from that perspective. And there are lots of challenges in terms of the global shipping industry. But when you look at the supply chain issues and the Ever Given blocking the Suez Canal, actually it's a positive to Braemar as it sort of that friction puts upward pressure on rates. And it's very well placed to benefit from that. Obviously, the higher the rates, the higher the commission. And as an aside, it's sort of in a period of growth at the moment. It's got a new chief exec, which used to be sort of James Gundy. Used to be the guy that operated their main division of shipbroking, and he's now the chief exec of the whole company, which has really put the focus on where it needs to be. And again, I'll mention valuation, as I probably will a few times in this. I do think lots of small companies in the UK are very attractively valued, and these guys are sitting there at 12 times P on the forward year. Recently reinstated their dividends, which really underpins and underlines their confidence in the underlying cash flows of the business.
And Severfield is a steel company that helped build the likes of the Shard and the Olympic Stadium, amongst other things. Will the new working from home or the new flexible working sort of dynamic around the world, will it have an impact on a company like that, or will they simply provide steel for different buildings? Maybe talk us through that as well.
Yeah, absolutely. So, Severfield, they're a genuine market leader in the UK of fabrication of structural steel. You just mentioned the Shard, the Olympic Stadium. They really are involved in so many landmark projects. And as a Shard sort of demonstrates, commercial offices do form a part of the company's order book. But importantly, the company is very well exposed to very attractive areas of growth, such as logistics and distribution hubs, data centers, and you could sort of, if you did subscribe to the theory that the office development might diminish, well, then the flip side of that home working coin is more people will shop online, more people will need distributed data and distributed goods as well. So there'll be a beneficiary of that trend as well. And I don't necessarily buy into the theory that the pandemic will bring the end of the traditional office. I just think maybe working habits will change, but I still anticipate that office will be an aspect of people's ordinary working life. Maybe not 5 days a week, but in some way, shape, or form. And again, valuation. They're on a 4% yield with 11 times PE, and to get any market leader, but for one that's so specialist as structural steel on that valuation is pretty eye-watering. And if I will, I'll just talk a bit about their something that's less well known about the company. You think structural steel, you wouldn't automatically think about anything ESG, but the company's doing great work in reducing its environmental footprint. It was listed in the FT's inaugural European Climate Leaders list for reducing emissions by over 20%. The small companies can be leaders in ESG, but they tend not to have whole divisions and departments of people reporting it to ratings agencies. So it's less well known about, but the company is starting to talk about things like that more readily in a more formalised basis, and it's really encouraging to see them communicate that message and do more good work over the next 12 to 18 months.
Just lastly, on ESG, could you maybe give us a bit more of an insight on that and how that role plays in smaller companies? Are you finding more companies that are working, that's filtered down into their businesses as well? Yeah,
that's a great question. So traditionally, small companies might have been doing excellent things in terms of environment, social considerations, governance, but they tended not to, and I'll use the in quotation marks, play the game that some other more corporate, larger companies might do. And because of this, I suppose, lack of disclosure, they may well have been rated more harshly by ratings agencies. What we're doing is, again, we get to know our companies as well as we possibly can. So that really ticks the governance box in our sort of information finding process. But we see what they're doing in terms of environment and social aspects, and we're encouraging them to more formally represent that as part of their annual reporting structure. And it's really pleasing to see many of them take that advice on board, and because of that, they're getting better ratings agencies by the numerous ESG ratings agencies that have popped up in the last 10 years.
That's great, Simon. Thank you very much for joining us today.
Thank you.
And if you'd like to learn more about the Unicorn UK Smaller Companies Fund, please visit FundCalibre.com. And while you're there, remember to subscribe to the Investing on the Go podcast. Please remember, we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these stocks at your time of listening.